Hey, happy Monday morning, everybody. Paulo Brandt's Clear to Close Brokers with this week in interest rates. You know, a lot's happening. We're going to talk about what influenced interest rates last week. More importantly, or equally important, we're going to talk about what's going to influence interest rates this week. A lot of surprises coming up here. So what do you say we just get started and dive right in? Let's start with where today's interest rates at. You notice they are up a little bit from last week. VA is sitting at 6.375. FHA is at 6.25. Conventional creeped up last week from about 6.5 to 6.75, and jumbo is at 6.375. So before we get to, I always do that. I always jump the gun here a little bit. So let me take a step back before we get to what the heck happened. Let's talk about the question of the week here. The question of the week is, should I pay points to lower my interest rate? Now, assuming you know what points are, and if you don't, just a real quick, you can get essentially any rate out there, but some rates come with points. Essentially, what you're saying is, I'm going to prepay interest up front, and what I get in return is a lower interest rate. That savings between what the rate is with no points to what the rate is with 1 point, that savings, you calculate what's called a recapture. So ideally about 2 years or 3 years it should take. The bank is betting that you're going to refinance and they're going to make more money. You're betting you're going to hold this loan long enough to where you get past that recapture period and you start actually getting a return on your investment or saving money. So the question is, should I pay points in today's market? It really depends. There's two types of thoughts here. The first thought is if that's the only way, remember, we've talked about making sure you have your budget, your top budget, your middle budget, and your lower budget. If you can't afford the house without paying the point, absolutely you should pay the point. Because here's the thing, in this market, which we're going to talk about in a second, sellers are paying to get your interest rates lower, so it's more affordable for you. However, if this is something that you could afford, well, then it becomes about strategy. Do you believe the market's going to go down? What's your beliefs? And these are things you should be having conversations with your loan officer that you work with. Hopefully they're experienced enough in this market to understand what influences interest rates and stuff like that. Because the idea of paying points today may take away. The reality is, if you believe rates are going down in the next 1 or 2 years, you may lose money. So it's a bigger conversation than just a yes or no. And if you want to have it, I'm here. Would love to converse and help you save money. All right, let's go back to what the heck happened last week. Why did rates go up? First of all, the Fed came out and the Fed notes came out from the meeting. Now, here's the important thing, what you need to hear about their actual meeting that they had. Let me look at my notes so I get this right. 9 Fed members voted to hold interest rates steady. 3 wanted to raise short-term interest rates. Not one person argued for a rate cut. So that tells the market that there's fears of inflation, that inflation isn't going away. Now, remember, the kryptonite to 30-year fixed rate is inflation. The Fed does not set inflation 30-year fixed rate, but it does impact it in terms of where they think inflation's going. So the bond market, when they hear statements like that, they become a little bit more proactive in terms of protecting their investment. And that's why we saw an interest rate increase last week. Now, one of the biggest mistakes, there's 2 biggest mistakes people make when they listen to the Fed. They think, A, they directly control 30-year fixed rates, which we've already talked about that. They do not. And number 2 is that when they reduce the interest rates, the 30-year fix is going to follow. That's not true either. In fact, if you look back at the past 3 or 4 rate reductions, actually the opposite happened. Rates actually went up. Now, leading up to that moment, the rates actually went down because remember, once the bond market believes that they're going to lower interest rates, they've already packed that rate reduction into that rate. Then what happens is, depending on what the Fed says, that's going to either push rates up or down. It's more important what they say than actually what they do. It's so fascinating. In fact, we're going to talk about what's going to be happening this week, and this is just going to blow your mind. It blew my mind. It was absolutely crazy. All right, the next report that came out that I think you would find interest is mortgage apps. Now, okay, so how would mortgage apps help me as a home buyer, as a real estate agent, really guide my clients in today's market? It's actually super important because it tells you what potential buyers are thinking. Let's bring up the report. So if you take a look at purchase apps, they are down 2%. Refinance are up 1.5%. And then it goes over, compared to year over year and stuff like that. The one of the things I want you to take away from mortgage apps is, let's talk about purchase. It's down 2%. I think it's down 4.4% from 6 weeks ago. This is not, a fluke. This is a trend. Buyers are very payment sensitive. They are not less buyers, but as rates push up, as we've been seeing the last couple of weeks, more buyers are sitting on the sidelines. They have not disappeared. If rates go back down, you're going to see them enter the market. And that's when you get that basic economics. More buyers, more competition, less negotiation skills, or less negotiation. So if you're a buyer in this market, I know it's what we want to believe is that, hey, rates are down or up. Let's wait for rates to come down. It's going to make it cheaper for us. But that may not be true. There's a huge conversation to have over that, because when it's competitive out there, they're not paying your closing costs, them, of course, being sellers. What also really interests me, if I'm going to bring this back up, is refinance our apps are up 1.5%. Was it a year ago? About a year ago, they were down 18.4%. This tells me that this whole marrying the house and dating the rate, people are sick and tired of this date. They don't care where the rates are at. They just want a better interest rate. They're not waiting anymore, because the truth is, if we're to be honest with ourselves, we've been talking about lower rates for a long time, and they're still not here. So let's talk a little bit about what's going on this week. This is going to be an impactful week as it relates to interest rates. On Tuesday, we have ADP weekly, which is a jobs report. Remember, we've talked about this, stronger jobs report, that put upward pressure on interest rates. Weaker jobs report, downward pressure on interest rates. What most people want to hear on tomorrow is Case-Shiller and FHFA. FHFA, these are true value measurements of home value appreciation. And what we're finding is, even with these elevated rates, man, values are holding, homes are holding their values very, very well. Wednesday, it's a big day on Wednesday. Not only do we have mortgage apps, which is more of a gauge like we just talked about, PCE is coming out, which is the Fed's favorite measurement of inflation, durable goods, and QD. Wait, I've stumbled over my words here. Q2 GDP is coming out, and that is something that's going to move the market tremendously. Along with Friday, we have Kevin Warsh, speaking at Jackson Hole. Okay, so I've laid the groundwork for this. We've talked about how people are paying attention to what the Fed says, not necessarily what they do. Kevin Warsh has been absolutely amazing at using less words, being less transparent. He wants to meet less. He wants to give us less. The market is begging for information from him to an extent. This is great. You're going to love this. I love this. That there's actually wagers on if Kevin Warsh is going to say good morning before he starts his talk. Check this out. Here are the odds. Productivity has it at 79%. He is going to say good morning. This is a Wall Street thing. This is true stuff. AI 66, challenge 70%. You're right. I mean, this is or 64%, excuse me, are believing that's going to be good morning. I may have stumbled over that slide, but the whole point is this is what the market is leaning in towards. They just need some guidance on what he's going to say, whether we're going to have inflationary or not. Okay, that's going to wrap it up. If we're not working together, or hey, even if you're thinking about buying a house, whether it be a month, 6 months, a year from now, it's never too soon to have a strategy session. There's no credit pulls, no applications, no nothing. Use my 20 years of experience. My desire is to help you and your family save money on your mortgage, whether you're refinancing or buying. And here's the best tip I can give you. If you're in this market and you're not working with a great real estate agent, you are going to pay more, and it's going to cost you and your family equity. I work with the best agents. If you need a recommendation, would absolutely love to introduce you to an agent that can help you and your family save money. All right, you guys, Paul Brandt's Clear to Close Brokers. See you next week.